Hi, welcome again to another edition of Market Analysis for today, May 28th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets for about almost 20 minutes prior to the US session open. Well, all's well that ends well. Traders seem to think when it comes to stocks. The problem is that not everything is well, and this isn't the end. After a strong rally on Tuesday, the S&P 500 is now more than 2% higher than on election day, and just 3.6% off its record high close on February 19th, after President Donald Trump backed off threats to ramp up tariffs on the European Union. Investors are betting that the worst of the trade war is behind us, as for now. That's not an irrational bet. Anyone who sold up in the recent dips likely missed the quick rebounds of the past 2 months, and the so-called taco trade, which stands for Trump always chickens out, in relation to tariff threats has been a decent wager so far. But two assets have yet to recover from the jolt. The dollar is still more than 8% weaker against a basket of peers since the start of the year, and the 10-year government bond yields, while still lower than on January 1st, have been broadly rising since the election. The trend is even clearer in yields for 30-year debt. Part of the story in bond yields is the global phenomenon. Demand for long-term Japanese bonds was weak in an auction Wednesday, but it's unusual to see the dollar falling and yields rising at the same time. Higher yields typically boost the dollar because they make U.S. investments more attractive. That hints at unease among institutional investors that deal more in bonds. Trump's July deadline for tariffs could start the tumult all over again, and earnings for the second quarter could disappoint. If the UK trade agreement is anything to go by, there could still be a significantly higher tariffs than before, once all the deals are done. While all's well that ends well is a Shakespearean comedy, the tariffs drama could yet be a Trumpian tragedy. So with that being said, let's take a look at what we could speculate to see in today's market fluctuation. Well, as we are looking at this daily candlestick chart, we see that the market just did rally above the 50-day moving average, and now is looking to target that level. Let me kind of this basically triple top, double top scenario right here. Now, let's do something more audacious. Let's go down to a 30-minute chart and then take a look. This identify those levels of support and resistance within half an hour market fluctuation. So let me just tighten this up because I need to make this tighter so that I have the levels here. This line is closer to me. So here we have. Okay, so let's take a look. So in this scenario of looking at the market in half an hour intervals, each candle being half an hour, well, it identifies support. Let's use the 50-day moving average again, and let's use the 20-day moving average. Let me bring this down. Since it's a 30-minute, all right, so let's go by 30 minutes. So initially, that swing high about half an hour ago, almost an hour ago, that's going to be our first level of resistance, 21,560, our second, and we find here our levels of support. 21,500 could be a psychological level of support initially. Let's see if the market will rebound off of that. So that will be our first level. So let's take a look. Let's just speculate that we are going to have a move to the upside, since we're basically looking to do in this half an hour chart. The market is looking to do basically like a ascending triangle. So let's speculate that the breakout is going to be to the upside. Let's go into the S&P 500. And here I also got, again, I'm gonna have to bring my levels Erase some of these lines here. All right, here we are. Just make them tighter so we can take a look at them. That's basically what I'm doing. All right, let's see. See the candles, otherwise we can't really see them. So again, the 50-day moving average and the 20 or the medium, that swing high at 730, and then I'm gonna leave 59.50 as our second level. So initially, again, this one is more of a sideways trading and a ascending triangle. So looking to move higher. Obviously, let's take a look at the Dow. I'm gonna bring this pretty much very close to where we are so we can expand them. Expand the chart so we can look at the candles. All right, I think that's good. All right, in this case, we're going to use the top Bollinger Band and then 42,460. The 50-day moving average is actually quite close to the market's low, so I'm going to use instead the medium or the 20-day moving average of the Bollinger Band, and then my second level of support is going to be 42,340. So looking at least another move to the upside, jump to the upside on that one. Let's take a look at crude oil. That it seems to be that OPEC obviously is going to be having that meeting. Incrementation of demand is being seen, so they're going to pump production. So initially, again, $62 is going to be our first level, and then from here on, I'm going to use 62.30. See, that will be a great level, and then the 50-day moving average and the 20-day moving average. Let's see if that will be a good place. Now we're going to have Nat Gas. Nat Gas is lower Bollinger Band. Nat Gas seems to be doing a lower fluctuation. We're looking to make a lower leg. So let's see if we'll find a rebound of the lower Bollinger Band. I'm going to use this double top that has been created in the last hours or so. Okay, so we're looking to sell gold. Look at gold, lower Bollinger Band, 3280. I'm actually going to leave that there, 3340 for gold. In this chart, it's a half an hour chart. The market is just doing sideways fluctuation and equal highs, equal lows. It's a pretty good setup for a breakout. Let's see if we're going to be going towards, you know what, I'm actually going to use 3,300 as my first level of support, psychological level. So let's see if we're able to just sustain ourselves here and then fluctuate about that 50 moving average, doing a bit to the upside. Now, silver, it's actually contracting. $33 is that psychological value. Upper Bollinger Band is going to be our first level, and then I'm going to use 3290 for second level of support. I'm actually going to use 3350 for our second level of resistance. This is looking to do another lower leg, even though it has already fluctuated below the Bollinger Band, the lower Bollinger Band, and is looking to perhaps do a sideways trading here. Let's look at copper. So copper is actually just moving lower. So lower Bollinger Band first level, I'm going to use $4.62, 60 cents actually, at a second. So let's see if initially we'll find some support and a rebound of the lower Bollinger Band, or otherwise continuation to the downside after breaking through that lower Bollinger Band. Bitcoin is just trading, sideways trading really. Look at that. Very, very narrow shadow. I'm going to use that swing low, that upper Bollinger Band, which is they've been squeezed quite. They've been squeezed, the bands, as you see here. So this is also a setup for a breakout. Let's see if it'll be done to lower, revisit that low. The currencies, the euro, the top, and the 50, lower Bollinger Band, and 128, 112.80 for the euro. So we could be seeing a rebound on the euro so far. The pound has fluctuated below previous level of support that we had. So they just use that lower Bollinger Band and then 134,400. But it has been in the past this is the third hour now that it has been fluctuating to the downside. So perhaps if it does continue to the downside, we'll find that support here at the lower Bollinger Band and a rebound from there. Now, this also is done because now the dollar index is catching a bid. So let's use the 50 moving average, and if the dollar index continues to move to the upside, we'll see more pressure on currency baskets and metals. Have a great trading day, and I'll see you tomorrow.